it's a blur. Gotta follow the data, ain't no time to err. Watch him speak now, with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Let's go. Today is the next day in the Chairman Powell World Tour. This guy is a celebrity. Thank you for joining us, everyone. I know you have a choice in FOMC streams, and I appreciate you choosing the original, the home, the inventors of the FOMC stream. We are here live. We've been covering these for years, and today is no exception. Where to start? Well, welcome back, guys. Hype up the stream, smash the like, subscribe, share out the stream. It's going to get very spicy here. So it is about 1:30 p.m. East. We have only 30 minutes to get through everything we want to get through before the interest rate decision comes out live. And then Chairman Powell himself will join us. And we'll find out what he says. We'll see. Fed Watch Tool and virtually everybody else pricing in or expecting nothing to happen today, and that's a really good bet. Like I said, we've been covering these, and not that much is said every time. But while we may not get a cut, what's going to be important here is the rhetoric. It's going to be the forward guidance, what the Fed has to say to us, and especially off of, let me pull this up, a nice CPI coming in. CPI month over month, year over year, coming in under forecast. This is definitely some soft data. This is what the Fed is looking for, but will it be enough? I personally don't think so. I don't think we're getting a rate cut until, I think, post-election. But hey, you never know. And if there was ever a catalyst that might bring it to us early, maybe this is it. What do you think, chat? Let me know. A letter sent to the Honorable Chairman Powell from the less honorable Elizabeth Warren, basically saying, we write you today to urge the Federal Reserve to cut the federal funds rate from the current 2-decade high, which is a little deceptive. It is a 2-decade high, but if you look back at the interest rates over the last 50 years, 5% is honestly about average. So it is a 2-decade high, but it isn't outside of the realm of what we're used to. This sustained period of high interest rates, she writes, is slowing the economy and failing to address the remaining key drivers of inflation. Furthermore, the European Central Bank, which like the Fed, why are they writing this to the Fed? The Fed knows what the Fed is, has a mandate to steer inflation towards 2% target, cut interest rates for the first time in years, and it's time for the Fed to do the same. I don't know if that'll be enough to sway the wonderful, the magical Chairman Powell, but that is a new piece of it. I don't know. It's a new factor. It's a new player on the field. In April, we saw not an interest rate cut, but we did get the first signs and the first step towards moving from a quantitative tightening to a quantitative easing regime. Now, for those of you who aren't familiar, understandable. I had to look it up. But basically, when the Fed tightens, quantitative tightens, they're removing dollars from the circulating supply. Now, this is supposed to combat inflation. It's another tool in their belt. They were removing dollars at the tune of $60 billion a month every single month. In April, they cut that down from 60 to 25 billion, and that isn't that isn't easing yet, but it is a step towards it, and it's the first step they've taken. So it would not surprise me to see at least some spicy stuff, at least maybe some new comments on that, maybe some impacts from it. I think it's going to be a very spicy day. We see stocks exploding. We see Bitcoin moving back after yesterday's super spooky sell-off. And things are all of a sudden looking not so bad. Basically, let me see. I got some notes here to get through really fast. The Federal Reserve maintained its monetary policy stance last month, keeping the Fed rate unchanged at 5.25 to 5% for the 6th consecutive meeting. Man, when they said higher for longer, apparently they were finally telling the truth about something. The Fed is closely monitoring economic indicators such as inflation, employment, GDP growth, etc. The key points: the CPI index being monitored to assess whether inflation is moving sustainably towards 2%. And we did see a move earlier today on that as the numbers came in cool. Employment is obviously something that they're keeping an eye on as well. We haven't seen what they want. What they want is really not great for us. They want to see unemployment up. I don't think that we've actually had significant or meaningful numbers towards that yet. And of course, economic growth. Today, we're going to be paying attention as they likely keep the Fed rates the same. We're going to be looking for any changes in policy stance or forward guidance that could impact our financial markets. They'll release their updated summary of economic projections, which includes forecasts for GDP growth, inflation, and unemployment rate. And these are the numbers that they're looking at. This is apparently the data that they never have. I don't understand it either. I don't get it. I understand they don't have the data when they have the data, but it is what it is. That's kind of good for those notes. Let me see. Some other very important things that happened recently right here. I got too many notes. I overprepared. We had other countries since last FOMC cut their interest rates. So, for example, Sweden cut its key interest rate by 2.25 or 25 basis points to 3.5% in May. This was the first rate cut by Riksbank since 2014. This is showing other countries are feeling the squeeze. And the U.S., while it may not do it, clearly not first, but it may have some extra pressure from that. Argentina cut its key interest rate by 10 percentage points. Not 0.1, 10 percentage points to 40% in May. This was the sixth rate cut since President Javier Milei took office in December of last year. Brazil cut their key interest rate by 0.5 or 50 BPS down to 13.25 in May. This was the second cut from the central bank in Brazil in 2024. China, the People's Bank of China cut its key interest rate by 0.1% to 3.5%. This was the first rate cut from China or the People's Bank of China since 2015. The gears are moving, and you can probably feel it. We're going to take a look at charts in just a minute here. For those of you tuning in, welcome. We have about 20 minutes until we have our interest rate decision in. We're going to get that here together. Implications on that: rate cuts by other central banks could indicate that global economic conditions are weakening, which could have an impact on the U.S. economy. The rate cuts by other central banks could lead to a weaker U.S. dollar, which could increase import prices and contribute to higher inflation in the U.S. These could put pressure on the Fed to consider cutting rates in the U.S. However, the Fed will need to also consider domestic economic conditions and inflation when making its monetary policy decisions. I should take this off here. Let's see. Last but not least, it's important to note that the Fed is considering a wide range of factors, like the data, maybe protesters, maybe Gina's opinion. If I was the chairman of the Fed, I probably would just ask Gina what she wants, and that would be easy. I'd make a great chairman. I had more notes, but you know what, guys? Let's throw these out the window. It's just not the day for it. I'm feeling the energy. I think you're feeling the energy. Let's look at some charts. Let's whip up some hopium. Let's get this moving. Let's get this stream on the road here. Watch this. Ready? Fade to black. There we are. I wanted to share. No, I don't want to join for free. Son of a bee. I wanted to share something sent to me by Optical Art, my guy, Mr. Steve. Great YouTube creator. Love this man. He is the Lord of the Rings, and I love to share some of his TA when he does this. I know he sends his community here. Shout out to everyone from Steve's community and every other community. We love you. Welcome. Steve is the Lord of the Rings, and he sent me this very spicy chart. So a lot of the time I describe Steve as yin to my yang. I am forever bullish, and it seemed that Steve was forever bearish, but I was wrong. Steve is actually looking for upside here, and you know what I have to say about that. I love people who don't agree with me because on the rare occasions we agree, it does tend to be explosive. So he's sending us this ring setup, the blue ring series. He made this just for us. Give him a subscribe, a follow after the live. Good stuff. The blue rings here, the fib ring tool, his favorite tool, seems to be showing us here. Every time price has reached this blue ring, it has pumped. This is no exception, it seems, as we have a nice recovery from yesterday. And honestly, I just don't really get the bearishness of the last few weeks. Yesterday's candle was spooky, but didn't really lead us anywhere dangerous. All the way back. All the way back. Ooh, wow. That's going to be rough for the short stream. Sorry, short stream. By the way, if the stream you're watching looks like this, you're on the mobile stream. Join us on the main stream. We got over 1,000 live viewers. I'm sure we'll have 2,000, 3,000. Who knows? If you're on a phone, go for it. Leave it there. If you have to run in the middle of this show, that's okay, guys. I know you have lives. Try to leave up a tab. It helps the algorithm. Anyway, very exciting news, bullish news from Steve, as here we are outside of the blue ring. And so far, we have kept these. We've kept this price. I think we're in the same boat here, looking for a flag, maybe a flat top, inverse head and shoulders, whatever it is. Steve specifically noted that any move to the downside that may touch this blue ring, and that looks like in the 63s-ish K area, is a strong long. He put out a great video about this earlier today. I recommend you go check it out. I'm on board, Steve. Salute to you, my friend. Let's go Bulls. The Bullas. So we're going to jump into some Bitcoin charts here. I'm going to pull up, I forgot to prepare, but we're going to pull up the traditional FOMC stream chart in just a minute. I'll probably do that. I'll do that. I should have done that before the stream. I was too busy doing notes. All right. I'll do my analysis here. Bitcoin sell-off yesterday. Spooky stuff. Price reached down just below 66K, liquidating some longs. I actually saw on Twitter someone write, I'm about to make it all back. As long as Bitcoin doesn't trade under 66K before, I don't remember what the number was, I'll make it all back and then some. I wonder how you're doing, buddy. I don't like to joke about people lose money, but I mean, you post on Twitter, you're opening yourself up for criticism. I hope you're okay. I hope he didn't lose his hat. Price almost immediately went below 66K, and I don't know what happened. I don't even remember the account. Anyway, on that move down, it may seem random as it didn't really line up with our chart too well, but then when we move to the daily time frame, we see a beautiful moving average that may be swooping in here to save our booties. The 50 daily sat at the bottom of yesterday's candle. We got a nice bullish reaction on that, and today we are now trading bullish engulfed, making back all the losses of yesterday and then some. Very strong to see Bitcoin close above 69.5 today. That's what I'm watching. Oh, I also prepared some chart stuff. I was up early. I did all kinds of stuff for you guys. I was hype. Let's see, past FOMCs. So just looking at the time, not looking really at price action too much or too closely. Here, these arrows are the past FOMC live streams. I only went back to September of last year. What's interesting is they do tend to coincide with a low on our chart that rallies to higher highs. Back in September, done. October, November, whatever. This was November, early November, done. No, not so much of a low there, mostly just up. That's okay, they get better. Here in December, the last one of last year, virtually at the bottom of our candle here. The FOMC coming in, saving price. Going on over. One more time. Into February. Price had hit a low after the ETFs. It traded sideways, much like it's doing now. The FOMC seemingly the catalyst. Now, it wasn't instant. It wasn't that day, new moon. But within a few days, within a week, so far, each one of these has led to a rally. Let's continue. We don't have many more to go. Over here in March, at the bottom of the sell-off from the all-time high, the FOMC went live, and we did move on. Now, we didn't move to a higher high, but we did see bullish price action in the days following, and I like that. Last month in May, you all joined us. Thank you, fam. Again, at the bottom, May 1st. It's hard to believe that was the FOMC. At the bottom, at 57,000. The dollar started tanking and Bitcoin found some legs here, moving back up to its range highs. And that brings us to today, fam. In the chat, let me pull it up. What are you feeling? Is this going to be a repeat? Is this going to be the same? I got the chat up. I have to reload it. Let me see here. Got the chat up. Jesme, what's up, Alper? What's up, Brendan? Crypto, Stevo, my guy, Alper, Coca-Cola, Gary, Kendu, Jonathan Morris, Jack, Foxy, Pickle. Who else is here? Christopher, Shirley Sound Brendan, me Paradis. What do you guys think? Is this FOMC going to play out similarly to the previous, or do we have something new on the horizon? I'm willing to entertain either side of that argument. Let's do really quick here. I think I have some more to go through, but let's do really quick. Last live stream's live trade. I told you guys I took a short simply because it made me feel comfortable in my long and my spot positions. I mean, that trade slacked. Let's be real. Going short at 70.3. Now the take profit target was only down at 68.5. Bitcoin obviously moved lower, just under 66K, and now today making a beautiful V-shaped recovery right back to where it sold off. Man, you gotta love when that TA hits, right? That's looking amazing. Amazing. GRT, that's not the answer. God candle time. I want a 2% God candle. Let's go. Let's go. FOMC will be a nothing burger aside Gina's makeup. I mean, that alone is worth watching, Foxy. Alone. Swampy here. It's swampy? Okay. Thanks for being here. Coin Operator, thank you for being here, man. I love these streams. They're my favorite day, roughly every month. Ooh, annoying ginger. I don't think you're annoying. My whole family are ginger, so I feel you, man. My beard is a little gingerish as well. Thanks for subscribing. That reminds me, if you're out there and you haven't joined, make this little number ticker down here. Make this spin, boys. Hit that subscribe in real time. That will turn over. It's very, very entertaining. It's kind of the peak of engagement with our live streams. If you haven't joined the Discord, jump in discord.gg/TomCrown. 24/7 live crypto chat going on. Great community. Check out the sponsors in the video description below. Sign up with any of our partners and you'll get VIP access in our Discord to all our rooms. I don't have a paid group. I also don't have any backup accounts on anything. Unrelated. I don't have a paid group. All you have to do is sign up with anybody. It doesn't cost you a thing. I want to shout out 𝐂𝐴lgo and Meta Signals, our sponsor. We have over 3,000 live viewers. Let's go, fam. Hype it up. You're doing a great job. Our sponsors, 𝐂𝐴lgo and Meta Signals. Best in the business at trading signals from Meta Signals. Best in the business from indicators on 𝐂𝐴lgo. Both of those links will give you a free trial. So check them out. Just give them a try. See if it's right for you. Nothing works for everyone. Everyone's a unique snowflake flower that requires their own special stuff. Okay, let's pull this down, pull the chat up. I do have some more charts. So what should I do? Should we go through some charts? We have roughly 12 minutes for the interest rate decision. 5 minutes before it comes in, I will prep you guys and warn you that it is coming and that we will together Google and try to find the answer first. We did a great job last time. We'll do a great job this time. Dude, I have so many tabs open. All right, closing those tabs, bringing up the chat. Let's go. Let's go. People, dude, think outside. You literally come in the chat. Look at this guy. Look at him. Look at it. I'm not making fun of him, but look at this guy. People. Oh, no, TRB. I apologize. I was wrong. I thought you were spamming people. You were spamming people last stream. You can't fool me. I remember. Did we hit circuit breaker or what? You know, that is a good idea. I have a few more charts pulled up. So 2-year yield on bonds break above 5.259% and interest rate cuts are coming. And again, the market is signaling interest rate not coming today. If we had seen this continue to rally, I think the odds would be in the favor of a cut. Not quite there. NASDAQ. Like, I mean, I love Bitcoin and crypto. I don't really care for stocks, but man, I love charts and NASDAQ is ripping. I tweeted yesterday, NASDAQ heading to 19.5K today, slapping that bell 3 hours before close. NASDAQ seems primed to simply melt faces along with other indices. Using our fib tool, let's take a peek. 20.7K going to be our measured move target from July all the way into November of last year. Even bigger though, if you want to aim bigger, 22.4, 1618 extension from the entire 2022 sell-off. That is some big numbers. I don't even think it can take that long. It seems like it wants to get there quickly. SPY doing something similar, opening nice and high above price. Let's see. Yesterday closed 536, now up at 542. These are S&P 500, not SPX. I think I lost the chart for that. Let's use our fib tool and do some mood math on that really quick as well. Man, stocks are freaking nuts. In my like 8 years of watching charts religiously, stocks, I've never really seen them act like this. They're doing something crazy. 1618 gives us $561 as our immediate target. 612, looking at our measured move. I think both of those are very, very probable, and the timing is going to be difficult. This stuff's moving fast. And it's no surprise that they're moving fast if you look at stocks like Apple. Apple opened today at 193, now trading at 217. I have a target of 220 before the first sign of a breather or retracement. Man, this is like a Bitcoin candle. I think stocks are stealing our candles, boys. Stocks are taking it. It's not good. We'll have our time. We're coming. The Q's also up along with everything else. It seems like nothing can hold these markets down except seemingly for GME. GME issued 75 million shares on June's pump and is now seemingly struggling to gain momentum here. Our long from 23.13 was on the money. I'm not so sure about this $80 target though. Time will tell. We will see. Real quick, just flip through some charts that I have just up in the background just to knock them out of the way. Turbo, long entry from last stream, hit. Looking for some more upside here on Turbo. Jasmine. I actually added this. You would have gotten this if you're in the VIP Discord free.
BTC to 44 to ref ETF buyers. Gotta show the first timers how paper hands get wrecked by diamond hands slightly smiling face. Damn MP it until elections. Then afterwards
up,
when
Michael?
We have a clear direction, doesn't matter who is prez. Pam MMMP.
You're not wrong. You're not wrong, my friend. Thank you for the 20, Michael. I appreciate you. I've muted super chats for now. I should have done that before the stream so I can get through this. We don't have a lot of time. Jasmine, 3.5 cents was the take profit target and now potentially being tested as support after breaking resistance. I think a play to 5 cents is still on the table. I think Jasmine's looking very nice. Like Jasmine from Aladdin, my favorite Disney princess. Dog, back testing its previous all-time high here as the beautiful entry. I tweeted, I'm re-entering Doge here, or re-entering Dog here. And so far, so good. Looking for a break past, let's find out here fast. Looking for a break past 8,008 cents. And then I'll be finding or scoping for continuation. We actually will get a new fib extension, so I should add that, even though I'm getting distracted, boys. We don't have that much time. I actually like this a lot. If Dog is bottomed out, if it can re-break its high from earlier this month, our measured move target for our local retracement back to the all-time high. Resistance broken, tested at support, continuation. 1.8 cents. Not a bad target from here. I think that is very likely. Very, very likely. I don't want to do any TA on this, but it's just in the news. Mother, 𝐒𝐈𝐆𝐍's coin. You guys are degens. 𝐒𝐈𝐆𝐍's coin pumping today after she visited the NYSE. Took pictures with Jim Cramer. Seems like her coin is up 33%. I wouldn't touch this with your money. Guys, if you're buying coins from celebrities, you might as well just donate to those celebrities. You don't need to buy their coin. Just donate directly. It's more efficient. But I will keep an eye on this. I have an alert at the all-time high. Let's see how, she's known for pumping. So let's see how high she can pump her coin. Pepe, who knows who asked for this, but Pepe entry looking good here. Retracing, heading back to that 40145 target. Break above that, make a close. That'll be your 618 retracement, and I'm looking for a retest of the all-time high. Pepe looking the spiciest. All right, give me a sec. We have 6 minutes until the interest rate decision is in. We're going to be Googling that together. Let me pull this up. We're going to be Googling that together as a team, as we always do. But I need to actually set this up. So, whoops. Let's do the 30-minute. So the next 30-minute candle, we will have it. After that, Powell will speak. And it's going to be spicy, boys. It's been a while, I feel, since we've actually had this kind of approach into the FOMC. I feel like we've had more sideways action over the last few months into these. There we go. Interest rate and Chirpow. Dollar, wow, dollar taking a crap this morning. I didn't see that. Actually, still not in the worst condition. It looks like on low time frames, a little BART up, a little BART back down. So far, holding this low, but on the last FOMC, we saw very, very nasty price action on the dollar. Potentially, we will see this low broken today. We're going to be following this very closely. Very closely, man. There we go. Got our timestamps marked out. We're almost ready. Here we go. Kind reminder. FOMC days are extremely volatile. They are very painful days, very difficult days to trade. I do not recommend opening new trades on FOMC day. I say this every month. Price action tends to follow a pretty predictable movement. However, that predictable movement typically results in longs and shorts getting stopped out. So I'm going to apply our normal TA here. Price is clearly moving up into this announcement. Oh no, here we go. Clearly moving up into the interest rate decision publish. And what we typically see, now it's not guaranteed, but this is surprising, honestly, how accurate it is. We typically see price reverse into the decision and then basically price reverse again once Chairman Powell himself speaks. And at the end of the day, we usually end up right about where we started. So be careful. You may get whipped out in either direction. I don't recommend it. If you are going to do it, though, you might as well use my links in the video description below. At least that way you're helping support the stream. So there it is. We got that set up quickly. That's good stuff. We have 1 minute. Wow, look at the dollar on the 1 minute. It is completely flat. Dump flat. Dump and flatten. Here we are. Line these up because I'm a little OCD. There it is. All right, boys. We have 3 minutes. Tres minutos. This is your last opportunity to grab your brews, roll up. If you haven't hit the like button, it's a good time to do that. If you haven't subscribed, get that number rolling. 112,858 subscribers. Let's get to 113,000 today. We can do it. What's up, Mr. Yoel? I see you, man. I see Mr. Yoel subscribing. ABCDE subscribed. Piyush Tanwar. Bentaleb. Jin G. Satin. Gifted a membership. Congrats, Jack. Appreciate you, man. Nafi. Blockchain Boys. Austin Rogers. Mohammed subscribed. Esteban subscribed. Mystery Kid. Coutseur. Jin G. Satalon. I'm sorry, man. I missed your super chat. I don't know at all what currency that is, but I appreciate you. He asks, what FOMC today gonna do to stock market? We're gonna have to hear what he has to say. With Elizabeth Warren's letter to the Fed, we could see there's a possibility of maybe a cut. I want to put that probability at like 1%. I think the most likely thing is nothing. It's really just the wild card there from Elizabeth Warren. Well, it doesn't really put pressure on the Fed. What we went over in the beginning of the stream with other countries cutting interest rates, etc., likely to put some pressure, or at least more pressure than was there last FOMC. What's up, Luffy? Mohammed again, Velamir, Steelers 1968. You know, I'll put this back up. We can put the alert box back up for now, just so we can play some of these subscribers in. Good to have you. Good to see you. We have 1 minute. Guys, open your Google tabs. We're going to be Googling. I'm going to open my Google tabs. Giggity, that's what she said. And we're going to be looking for this interest rate decision as quickly as we can. When you find it, put it in the chat and name your source. I'm going to pull up cryptocraft.com. They've been pretty solid at delivering these quickly. So maybe I'll win. Maybe I'll beat you guys. Don't let me beat you. Start Googling. Begin the Googles. You got it. Let me see how many seconds we got. 9 seconds. What's up, Crypto Pollo? I'm ready. Sion Thomas, Stymie Christopher, Ghost Watch. Bro, your Fed Speak streams are the best. They're the best because of you guys. Because you guys are here. You make these the best. It's not me, it's the community. Here we go. Cryptocraft, I believe, is reporting no interest rate change. Forex Factory, 0.2%. What else? Cryptocraft 5.5. Yeah, 5.5. No change. Dumping, says Sonny. Are we dumping? Here it is. I told you. I told you so, boys. I told you. I said, be careful. Boom. I don't know. It just comes with the territory. Watching these every month for years. There it is. Bitcoin taking a crap off of literally no change. As long as it doesn't trade back down, I'll say to like 67.3, nothing has really happened here. But man, that is one of the more satisfying interest rate decision moves. Let's check out S&P 500 giving back some of the gains today. Wow. We do have an open gap of 5,376 on the SPX. It is lower. Wow. SPX just flipped its day red. However, with this giant gap up on open, it's still very much in the green versus yesterday. The dollar, this sneaky link over here, the dollar seeing a little love off of no change here. No change. On this exact publish, the dollar rallied 0.07%, or as dollar maxis call it, a God candle for the dollar. Reaching up to 104.5 from 104.36. The dollar finding some legs here. I'm going to say this is not exactly what I expected. Not exactly what I expected. Let me set some alerts so the spice does not go unnoticed if we jump into other charts. Basically just at these range lows. There we go. There we go. What should we do, chat? We have like 20 minutes until Chairman Powell is on. What do you want to do? Stocks now recovering from the 1 second sell-off here. I told you, trading today is not a great idea. I say it every month. Dollar giving back a little bit. Stocks now touching where they dumped from. Bitcoin not getting the memo. Bitcoin hanging out, kind of like a low time frame bear flag here. Man, spicy. I knew this was going to be spicy. Did I get any alerts? Let's see. Any alerts come through? Nvidia, that was earlier today. Nasdaq, INJ, Pepe, MPC. Ooh, MPC triggered 2.7 cents. We have to look at MPC. I don't know what it is. I haven't bought any. I should have bought some probably. I know a lot of you, I actually got a lot of DMs over the last week or two saying, man, your meme calls have been on fire. I'm going to buy this MPC. And I was like, dude, do you do what you want to do with your own money? Not financial advice. But MPC apparently a solid gain for a lot of you. Well done. Congrats. That's all you boys. It's not me. I might buy it if it comes back to like 1.7 cents. We'll see. Just like $100 I'll throw at it. Nothing crazy. Where did my Bitcoin chart go? Here it is. FOMC. Dollar continuing to show strength. We're on the 1 minute chart. Don't go nuts. On the interest rate, no change. Stocks still hovering right below where they dumped from. Bitcoin mirroring the S&P, I'll say. A little more exaggerated move. That is nice. Let's see. In 1 minute, Bitcoin traded from 69.8 all the way down 1.5% to 68.7. If that was the stock market, they would have halted trading probably. Is what it is. 𝐂𝐲 USD, anti-fufu guru. MPC, not PooCoin. I don't think it is PooCoin. Since we're talking about memes, can we look at XRP? Fair enough. You know what? I do want to pull up XRP only because I saw somewhere on Twitter today that XRP's stablecoin may officially have gone live. Now let's check this out. You guys are doing a great job. We are now, I think we got like 20, 30 more subscribers since I said that. Doing a great job. Keep smashing those buttons. We're going to jump into XRP. Has it moved? No, it hasn't. XRP doing the XRP crawl here. Still holding on to its low from April. Slightly lower than August. Nothing going on the XRP chart. I know that feeling all too well, XR peoples. My baby Litecoin. I don't even want to pull it up. It's too painful right now. XRP just continuing out its bear flag. Not a lot of movement here. Really not a lot of movement. Let's see the XRP BTC. How much damage do we have? XRP BTC still holding on to its yearly open or yearly low here from January at 633 at 701 currently. That is actually, I need an alert here. You should have an alert if you're watching XRP. A break of our yearly low for XRP BTC is it's gonna be a very bearish signal. I hope it doesn't happen for you guys. For anyone out there who has a lot of XRP in their bag, hope it doesn't happen for you. Updating here. Bitcoin doing nothing. Stocks doing nothing. Dollar dicking around here. No higher highs or lower lows since the announcement. What's up, Sergio? Gina. Where's Gina? I need my Gina. What was the rate? No rate cut. Nothing. Nada. Bub kiss. But that is what we expected. In fact, that's what everyone expected. If you missed the beginning of the stream, I do recommend you go back and watch maybe the first 10 minutes. You got time before Chairman Powell comes on, then you can just fast forward in. I recommend it. We went through a lot here. It isn't the interest rate decision that is going to be spicy. There are other factors in play, and I am locked in. I'm ready. There are other factors in play here, especially off of the quantitative easing tightening cycle in April. If anything is said about that, we may see markets react very strongly. I'm interested to hear if Chairman Powell will comment on other countries' interest rate cuts. I'm interested in hearing from Gina. Doesn't really matter what about. It doesn't really matter. I'm interested in maybe protesters showing up. I'm interested in Chairman Powell potentially cursing, dropping an F-bomb or two. Maybe some people will glue themselves to the wall. There's a lot of stuff that could happen. The spice is just beginning, fam. We are now 20 minutes away from Chairman Powell speaking live. How are we going to kill the time? Easing. The tightening of the easing. Easing the tightening of the easing. I like that, Christopher. You're right on. We just broke 12.9K subscribers. Let's get to 113K today. Keep smashing those buttons. Hit that like button. Share this stream out. You know the deal. The data. Where is Chairman Powell's data? Is Chairman Powell's data here? He's not here, man. Sergio, great point. It's all about the comments. Absolutely. Absolutely all about the comments. It is a pipe dream to think they would have actually changed rates today. I do not believe, with all of my core and soul, I do not believe we will see an interest rate cut until post-election, if even this year. They said they would do 3 this year. I know. But these are the people who said inflation was transitory 4 years ago. They're not always right. What's up, Dilbar? Alex Wells, Data from Star Trek could help crunch those numbers. Let's call him in. Data, we're calling on you. That's all you have to understand. That XRP only moves properly when the judge is given the verdict. Mike with a savage burn on the XR peoples out there. Lost 69K. Indeed we did. Kinda. A little bit. Coins Check gifting out a membership. Coins Check, you are wonderful. You know what? I'm going to gift out a membership too. Why not? We're burning time here. If you want to potentially receive the exclusive Tom Crown YouTube membership for free right here, right now, make sure you've opted into gift memberships. It should prompt you when you join the live. Then make sure you've sent a message in the live stream, liked, subscribed, enabled notifications, voted in the poll. All those things are engagement. The more engagement you deliver to this live stream, the more likely YouTube says you are to win. So I'll give you guys 60 seconds just to put a message. How about this? Spam the chat a little bit. Let's do a little spamming. While you're at it, let's spam these placebo buttons, because remember, placebo is the best medicine. Spam these buttons up. Let's get the hype going. We're just getting into this Chairman Powell stream. I'm feeling good. You're feeling good. This little sell-off was nothing. It was a sell-off for ants. We expected it. That's right. Spam. Spazam. Spazam. Tom always here for Chairman Powell. We have to release an official drinking game rule set for these. But the thing is, I want you guys just to be responsible and safe. Do not operate motor vehicles. Do not drink if you're not of the legal age. Don't drink if you're allergic to alcohol. I don't know, all the other BS. Don't do it. But if you're going to do it, cheers, brothers. All right. I'm liking that spam. Don't trust, verify, man. Yeah, take profit on my short. I did not. I'll pull that up in a minute here. I'll pull that up. Stocks are rigged. Chairman Powell, Roboto. Oh, I love you guys. You guys are like, Tom, I love these streams. I love you guys at these streams. That's what gets me going. That's what gets me hyped. All right, I'm gifting some out. You're going to win some of Tom Crown's money membership money. I don't know. Who knows? Here we go. Boom, blasted. While the spam was going, I see S subscribe, Titan Solution, Horcrux subscribe from Harry Potter, William Street, Wesley Vork, Luffy. Oh, that's an old one. Keep coming, boys. Congrats to Crypto Monk, Mike Seberg, Sock Insanity, Luhan Steenkamp, and Belair Stevenson that won those beautiful memberships. I think other people did. Digital Asset DGen, you got 𝐂𝐴𝐧 membership. Honestly, if there's one better membership you can get it from, it's 𝐂𝐴𝐧. Congrats. Congrats to everyone. What does the membership unlock? Well, it just unlocks emojis in the live stream. So if you won some emojis today, drop some 𝐶HPOW emojis in the chat. And what do? We got 19 minutes. What are we looking at? What do you guys want to see? Congrats to the Wanners. You love spamming? Yeah, we all do. Deep down inside, we all have like a human urge just to spam, just to keep saying the things we're saying over and over and over again. I'll throw up these live trades. Here they are. Right here. I don't know if I made any changes. Let's see. Minus 0.1 short, 0.2 long. I didn't make any changes. Wow. You know what, though? I got lucky. You know, I could just LARP you guys BS and be like, that's skill, baby. I got lucky. Did not have my stop hit here. My stop was sitting at 65.7. Price went to 66.1 on Fairdesk. Fairdesk link in the video description below. They don't have KYC. Along with FEMX, Coinbase, all the goodies. Here's something that grabs my eye, and we're going to take a peek at this as well. At least locally on exchange here, Fairdesk, we see a negative funding rate. That's good news. That's good stuff. We've had a positive funding rate for quite a bit. And that is not really what we're looking for when we're trying to find upside. We like to see those short squeeze. I did read something about CME Group. Their shorts on Bitcoin at all-time highs. I think it's currently at $7 billion, something like that. Oh, you know what? I should, I don't want to shill, but I should throw this out here. Fairdesk actually, unprompted, gave me this. They're doing some kind of promotion if you use my link. I put that link in the chat. I'll pin it here for a little bit. You'll get some kind of rebate on trades. So, I mean, it's just a discount. Something like $7 billion in shorts. And for perspective, the previous all-time high at 2021 of CME shorts was only $2 billion. So they're 3.5 more leverage short than they were last cycle. That is spicy. That is a lot of money to be squeezed. I will speculate that a lot of that CME shorting, because we don't see that across the space. It's not every exchange. It's specifically CME. I speculate that those shorts are less of a bet to the downside than they are a hedge, or what I call a net neutral position. So I'm speculating here that CME Group is buying spot ETF and selling short perpetuals at the same quantity. And what that does, I know it sounds crazy, but what that does is it allows them to capture some discrepancies in price. For instance, if spot is trading lower than perps, they can buy one Bitcoin, go one Bitcoin short on like 1x, and essentially, no matter what happens, they don't lose money. They get to pocket that little difference. I think that's what's happening. I don't think it's a bet down as much as it is just a net neutral position. That is a really classic market maker strategy. I don't really like the net neutral position personally, but I do, as you can see, like to take shorts against my longs and longs against my shorts. It's good stuff. Arbitrage, perhaps. An inverse bot, exactly how you described. That's right, Sin. That's right. Live peer, no shorts or longs. It could be buy orders too, right? What could be? Watch the market pump now and take that money. I wouldn't doubt it. I wouldn't doubt it. We drew this before the dump, and it just coincidentally it dumped, right to that price. That's coincidence. But the dump itself, not so much. Not so coincidental. This is the price action that we typically see on FOMC, and this is why I warn you. Be weary. Be very weary of any positions you have open during these, man. Because it tends to punish the longs and the shorts, and then just basically back to where it started. Very uneventful / eventful. What's up, 11 Roots, Scion Thomas, Baron? Good names in the chat. Great names in the chat, even. We're almost to 113,000 subscribers. We're going to make it here today. By the way, just another reminder, if you see a vertical stream, very tall, thin stream, you're on a computer or whatever, TV, join us on the main stream. That's for mobile devices. If you're enjoying it, stay there. If you're on that one, though, tap that screen. Give it some hearts. Join us on the main one. We have over 3,000 people watching live. It is hype as shizzle in here. It is so hype as shizzle. We got Ace of Hearts, AK Blaze, Al Mascari, Alex Wells, Amit Vikram, Andrew P, BG Bad Baptist, my guy, Bean Juice, Berengar, Blair, Brendan, Colin, Christopher, Coca-Cola, Codex, Coffaholic, Coins Chick, Crypto Monk, Cryptogenic, Crypto Paper Root, Crypto Stevo, Dashel Rodriguez, Digital Asset Degen, DJG, Double Chill, Drunk Maroon, Dutang, Fireman, Frosted Flake, G-Man, G-Not, Hugo Crypto, 𝐖𝐵𝐍𝐵, NTDo, Joe Cope, John Doe, Jonathan, Josh, Just a User, Kevin, Chris Pax, Lazarus Hand, Line in My Pocket. The names are flying. There's so many people. Put some in the chat. Let me know you're here. M Ninja, Mohammed, Music Miracles, Peter Hansert, Philip J. Fry, Steve Optical Art is here. We went over your chart, my friend. I told everyone to go subscribe to you. Red Greer, Real Big Fish plays the rave again. I want to rave again. Roro Crypto, S, Sandkit, S Fick, Classes, Shake, Rosen, Scion, Thomas, Skate Crow, Scaffa, Sunny Sai, Taylor, the 𝐿𝐴𝐿 Gamer, Tillamook Pooch, VK Matathel, Zenomurdus, your owner, Monkey, Think Outside. Oh my god, so many names. There's so many names. This is one of the most hype streams we've had in a while. I like it. Do we have 4,200 viewers? I'm not even watching. If I watch it, I'll just stare at it the whole time. Let's hear the pump music. Here you go.
Money machine going bird. Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew, navigating through the markets, knowing what to do. Federal Reserves in control, making moves, keeping that money flowing so the economy can groove. Chair Powell, making paper every hour. Chair Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
My guy, Mr. Candles. Mr. Frankai Candles is in the hizzy. Give this man some love.
Smash that like button, everybody. Thumbs up, thumbs up, thumbs up.
Love that guy. How you doing, Frankie? Are you ready for the biggest FOMC in history, in multiple universes, in all of the multiverse? There's no multiverse with a bigger FOMC than the one today, ever in existence or ever in the future. By the way, guys, I know it's clickbaity. The reason I do this is because Benjamin Cohen always rips on the FOMC as being the biggest ever, and I just find it hilarious because Benjamin Cohen does not come at anything, and I find it entertaining. I find it fun. Plus, they always are. They're always the biggest, right? At least they're the biggest here with our fam, as our fam is growing all day, every day. Holy shizzles. You're so excited you peed a bit, J-Day. That is the correct level of hype. The correct level of hype today is a little bit of peeing. Just like a dash of peeing. Let's pull up CoinGecko here. Let's pull up CoinGecko. Is Benjamin Cohen a perma bear? I would not describe him that way. Let's pull up CoinGecko. Let's just take a peek at what's going on this crazy day in crypto, man. Biggest gainers, INJ up at 31.78. I'll pull that up. We'll pull that up. Notcoin up 20%, but doesn't really look like it's anywhere significant here. Ondo at 138. Uniswap at 10. Render 931. Render, when are you going to take off, dude? I know you're going to do it. You want it. When are you going to do it? Bonk up 11. BitTensor up 11. Stacks up 11. Dog with Hat up 10. FET, the talk of the town, FET up 10%. Trending cryptos, Welsh Corgi coin. Moo the bull. Have you guys heard of any of these? I mean, I've heard of not Magma Hat, but Magma. Have you heard of any of these things? I don't know how they get these trending coins. I've heard Harry Potter, Obama, Sonic Inu. That one I've heard of. Dynex, Toshi, Planet IX, Magma. Here we go. This one I've heard of. Mochi, Aether, IONET, Notcoin, Ondo, Bitcoin. Bitcoin on the trending coins. Rare. Very rare. Biggest gainers and losers. Ether up 88% on the day. $1 billion cat up 67%. People love their cats, man. IONET, Byte, Baby. Let me see anything spicy. ARK, Bob, Token, Kitty. Do you guys own any of these? Biggest losers, Leverify. Someone was spamming for Lever last stream. I wonder how that went out. Swarm, Shentu. I don't know any of these. Beercoin down. You know, Beercoin is one that I just keep forgetting to TA for you. You keep asking for it, I keep forgetting, and I apologize. Popcat. Boys in the Club. Harry O'Bot. Yeah, dude, I don't even know. That was back when like people were making gibberish tickers. You have 1 baby bonk. It's worth about $12. Well, Steve, if that just goes to $1, you'll be richer than the entire planet. So think of that. Think of that, buddy. Don't beat yourself up. It's only $12. That could be a $1 billion. End stream for certified pump. Colin, we can't end it. We have 8 minutes until Powell is live. Now is the time that we should be building the hype up the most, that we should be getting most into it, because the man himself will be joining us very, very shortly. Let me even refresh this. Let me see if they made any progress here. Sometimes they'll start off the feed early. Nope. No early feed. That's okay. Prepare also, unrelated, for really bad audio, really bad video. Maybe they disconnect for a while. The Fed, by the way, Powell, if you're listening, which I know Powell does watch these streams. He won't ever admit it, but he watches these because he wants to know what to say, and he listens to me. If you guys need help with your audio and video, just reach out, bro. I'm here. I'm right here. It's okay. I'll help you. Oh, man. Let's have some beer. Cheers. I'll pull a beer. Golf audio sucks, dude. It's so bad. It's just terrible. I never made a beer chart. Should I make a beer chart? We kind of looked briefly at Pepe. I think Pepe's looking good. Our long's looking healthy. Dog. I want to see more follow through, but that long looking healthy. Yesterday filled all of the trades, man. Jasmine. I think this could look stronger here, actually. I want to see a bullish engulf close. Turbo retested. It looks like on the announcement, our entry, a little sketchy. A little sketched out on that one. A little sketched on that turbo trade. Let's look at Ethereum. We didn't even look at Ethereum. Ethereum's ETF announced, I don't know, back here, what, May 27th? Something like that. Really playing out similar to Bitcoin's ETF, it seems, with these down, muted high, down, maybe another muted high, lower low. Really following in Big Brother Papa Corn's footstep on ETF. I wouldn't get bearish yet. Even though the price is moving down, I wouldn't get bearish yet. Touched a low of 3,300, lower than I thought. However, rallied back to 3,600 today. To zoom this in. Basically just back testing that previous support as resistance. We're going to need to see Ethereum settle up above, I'll say 3,700 today to get out of this. To get out of trouble. What's up, Constantine? How are you doing? I see you. I appreciate your 5 pounds. Did I miss any other super chats? Dash L Rodriguez. I don't know how long ago this was. I apologize for missing it. Saudi oil deal off. The dollar is going for a dive. Let's see how true that is right now. That may be true, but it may not. Where did this chart go? I keep losing my charts. Here it is. Here it is. Dollar taking a dive. Nah, dollar pumped on that. Dollar pumped on it. Holding on to some of those gains, but oh, Professor Beans is trying to come in. By the way, guys, because we have a moment, Professor Beans, please send her your good energy and your prayers. She had surgery again last week, and the biopsy came back, and this one was cancerous. So it is a rough time for us, but she's doing great. She's recovering great. We're going to have to take her to the vet more often. Basically, they said we could start her on chemo, but we don't want to do that. We want to just maybe take her to the vet more often and look for them bumps. But she's doing great. She's happy. She's healthy. The vet can't believe she's 12 years old. But yeah, just send your prayers out. That's all. I love that dog. I don't know what I'd do without her. So anyway, none of that. No time for sadness. Only time for pumps. Thank you. Sending your blood. I love it. Or sending your love. Thank you. Only time for pumps right now. We can get into that later. I lose charts like 𝐤𝐵𝐻𝐼's data. Indeed. We have just 4 minutes. 4 minutes for 𝐤𝐵𝐻𝐼. You will be live in just 4 minutes. What can we do in 4 minutes? You can only really make sure you've liked and subscribed, shared the stream, joined our fam, jumped in the Discord, all those little shilly things. That's all we can do. What's up, Bomb Biggie? I see that. £5.99. Felix Logistics. I see you subscribing. Angel Felix. I guess a different account. Kind of sus, though. Appreciate you subscribing. Abdirasak Hussein. Reggie. Lucas Elliott. El Joker. So many new names. So many great people joining our family. We are so close. We are so very close to 113,000 subscribers. It's going to be epic. It's going to be epic. I don't know why this is getting so gunked up. You know what? I might just leave it. There we go. Good enough for me on the live. Fixed it. That's all I needed before 𝐤𝐵𝐻𝐼. That's all I needed. Okay. Zooming back into our charts. Sideways price action, baby. Predictable rally into interest rate decision, reversal, and then are we going to get the final piece of the FOMC trading puzzle? When 𝐤𝐵𝐻𝐼 goes live, we do tend to see this move reach back to that equilibrium. I'll say that's like 69.6, 69.5, something like that. What do you think? I don't know if you're running polls, Pickle, but if you are, you're the man. If not, don't worry about it. Don't even worry. 2 minutes. Dos minutos. Announced. 0 rate cut. Indeed. Yeah, we can change. I can definitely change this poll. 63% said nothing burger. 63% are going home with a prize of this thumbs up directed at you. Well done. Well done. What's that song called, bro? What song?
Money machine going bird. Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Let's go. By the way, if you're over here on this vertical stream, you can join the main stream with over 4,000 live viewers. And after the live stream, what you should do is go check out our free trading course. It's got tons of great lessons. We're always adding more. It's totally free. There is no paid course. These are the best videos on YouTube for learning to trade. That's it, boys. 1 minute. Let's power up the 𝐤𝐵𝐻𝐼 stream. Powering up. Yeah, I don't think we need that music. What do you think? What do you think? Do we need that music? I don't think we need that music. It is classy. It's like nice elevator music. Let me set this up. All right. Starting up here any minute now. The man, the myth, the legend, 𝐤𝐵𝐻𝐼 will be joining us for the live. On the bottom here, we have the dollar. In the middle, we have the S&P, or we'll just call it indices in the US. And of course, our baby, the Bitcoin, sitting up at top. What will happen? You know, that's a good poll, and I think I have just enough time to throw it up there. What will happen? Which will rally during this? Because one of these three is going to rally. One of them, if not more than one. Depends what happens. What will rally? Gain the most during 𝐤𝐵𝐻𝐼's Bitcoin. Okay. It's coming on. hear anything. Polls going up. I'm just going to refresh this once. It's Chair Powell time, baby. Look at this guy's iPad. This guy's iPad down here. Nope, he's gone.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals.
Yep.
With continued strong job gains and a low unemployment rate.
Inflation
Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%.
It's convenient to exclude.
The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to
Looks like they're dropping their feed. We did call it. Who had money on that? Who had money on the Fed? There we go.
In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals.
And what's the point of it?
If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina, yes, always Gina first. Everyone, shut up.
Thank you, Mr. Chairman.
That's not
Steve
Gina.
Leisman, CNBC.
Not listening.
Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end.
Asking about the numbers.
It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really, and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think let me say that we welcome today's reading and hope for more like that.
But if it
What
comes
do
in,
you
just
have
to follow up, it
confidence
comes
in?
in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that, I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast month by month that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick.
That's not Gina. What's going on?
Nick Timmerouse of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summer of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all of them as plausible. But I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident, have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence. But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that, and some people do, some people don't. Most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can reflect it in one day. I think we'll you know, you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, you know, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, you know, some people generally do, but most people generally don't.
Gina. Does anybody see Gina? Also, Chair Powell, what are you confident
Hi, Chair Powell.
in
Janelle
anything?
Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So
Yeah.
by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, you know, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and you know that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, you know, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, I mean, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, you know, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
That was a ton of words to say nothing. Chair Powell style.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter, and what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. You know, there are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. You know, we're at, the economy has, you know, repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected.
He is proud of himself for that
We'll
one.
just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Data. Gina. Everybody shut up. It's Gina.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret what that means about how the committee views its current policy setting?
You're looking great.
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, though,
that'd be great.
People have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were, you know, very low by recent history measures. Now, we can't really know that. That's an interesting dispute and discussion to have now, but ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and you know, there's a really good question about whether those really have changed, or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And you know, my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having you know, the effects that we would hope for.
Just give it back to Gina. We don't need, these people don't need to talk.
Thanks, Chair Powell. Howard Schneider with Reuters. Just
Chair
to
Powell.
carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, you know, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You know, you can translate it into the language you're talking about, but to me the focus is more on, we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And you know, in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period. unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of what, some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand. And that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is yes, that's true. Are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Sure, Powell, what do you know? Do you know anything at all?
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation with growth at a good level and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Chris.
The banking system is strong and robust.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on
Chris,
inflation,
get that guy
if you
off
can
the
tell
mic.
us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel 𝐂𝐶 from the
Chair
Washington
Powell.
Post. Thanks for taking our questions.
Chair Powell, she
There's
said it.
obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably on 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene.
Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
Ooh, who's this? Hello. Hello.
A new lady. I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire. That's going to be a hard follow-up.
Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation.
Chat, go out, find out who she is, report back.
Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that, and that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about. Your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does. And it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Yeah, credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria. Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken? When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So and also the fact that we look at all of the whole situation. So a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too. So something like negative payroll numbers would be.
I'm not going to. I can think of things many things would make it on that list, but I don't think I'll butter them.
Sharing that.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
You know, I don't actually have that kind of mechanical thing in my thinking. I get that, you know, as many good ones as we had bad ones, but no, it's not like that. It's the whole, it's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you know, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
𝐂𝐡𝐚𝐫𝐭, great name, 𝐂𝐡𝐚𝐫𝐭.
Thank you for doing this. I'm 𝐂𝐡𝐚𝐫𝐭 with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't.
I was going to talk about rate cuts.
It's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, you know, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
I thought I was going to ask about interest rates. That'd have been dope. I'm looking for something. Hold up.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo
Chair
Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative, and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
You know, so we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is, you know, an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there, and you know, we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
I like the way
we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Point break
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Nancy. And then Gina, and
Hi,
then
Chair
Asian
Powell,
Gina.
Nancy Marshall
and then
Genzer
Rachel.
with Marketplace. Just one more question on housing.
Not a single person asked about like anything that I think matters. Anything we went over in the beginning of the stream.
Or will you wait until they start to moderate a bit?
I wouldn't, there isn't any one thing, one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So.
But if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
Well, guys, it was a meal served of nothing burgers and word salad, which is pretty much what we're used to. I am bummed. If you missed the start of the stream, go back and watch it. We were looking for some very insightful, good stuff that logically you'd think people would ask questions about. I'll forgive Gina, but no one else. Maybe Asian Gina. But man, they didn't talk about other countries' interest rate cuts. They didn't even think they said the word quantitative at all. There was no quantitative easing, no quantitative tightening. We put a poll up saying, is this dovish or is it hawkish? And you guys voted, let me see, 1,000 votes. 50% of us are doing the Chair Powell shrug. He did shrug for the first time ever today. And I agree. That felt like 3 hours, and it was about an hour, actually. That felt so long. They're always boring, but that one was something else. Well, maybe next month. Actually, there isn't one next month. I believe the next FOMC... Actually, maybe there is. There isn't one in August, to my knowledge. But we'll be here for it. You'll be here for it. We're going to have a good time either way. Maybe we'll find another Gina. One that isn't married. You never know. I do appreciate you guys tuning in. Thank you for subscribing. We hit 113,000. Amazing. Make sure you've subscribed. Jump in our Discord. Check out the links in the video description below. Get your free trials of LuxAlgo and MetaSignals. They're our sponsors. They're the best tools in the market. That's it, fam. I will see you guys Friday, or maybe we'll do a little spicy stream. We'll see what happens with this price action.